Right. Good afternoon, everyone. Rich Swerbinski with the Mortgage Collaborative here once again with the last week in mortgage today, our weekly walk through all the latest developments happening, news in the mortgage industry. Each week, I am pleased to be joined by members of the Mortgage Collaborative to fill in as kind of rotating co-hosts, trying to pick people that are going to bring a lot of insight to the table. And two of our favorite guys in tow for this week's episode. First off, the president of Trinity Oaks Mortgage, Michael Kuntz. Michael, thanks for joining us, bud.
Rich, thank you for having me. Appreciate the opportunity once again.
Absolutely. And this week, very pleased to be joined by the CEO of Total Expert, Joe Welu. Joe, good to see you, man.
Hey, buddy. Thanks for having me, man. Glad to be here.
Total Expert, longtime partner at TMC, back clearly before it was fashionable. And just want to thank you guys for all your support over the years. Many, many happy TMC lender members as clients. And for those that aren't familiar, Total Expert, just a really dynamic customer engagement platform. I don't even like to use the term CRM because it's a lot more than that. And especially for this type of climate where volume has fallen, obviously, very crucial to retain not only your customers, but your loan originators. And also vitally important to get in front of referral partners, new and old. So, Joe, want to thank you for all your platform has done for our members and your longtime partnership with TMC.
Oh, thank you, man. We're super grateful to be a part of the organization, and it has definitely been an awesome partnership. So thank you.
Awesome. Well, as always, been doing this show for over a year now. No shortage of topics every week. You would think that one individual industry would not spawn so much news, but tis the mortgage industry. And Michael, I'm going to start with you. There's so much going on. Obviously, the tragedy of what's going on in Ukraine right now, but as it relates to how it's impacting our economy and our industry, we have seen a little rate relief here this week. Checked just a little bit ago, the yield on the 10-year Treasury down to $1.70. It's down over 30 basis points from where it was a week ago. So a little rate relief that's come along with that. On the flip side, some of the recent numbers that have come out on January home sales, new home sales constricted, obviously, by some of the challenges to the building community, down 12.5% year over year versus Jan 21. Existing home sales down 2.5%. So a little bit slower start to the year on the home sale front as compared to a year ago, but so much demand out there still from people that want to buy homes. What are you anticipating for the spring buying season that we have fast approaching?
Well, thank you, Rich. Well, first of all, just heart goes out, thoughts and prayers to those men, women, and children in Ukraine. It's just devastating to have to turn the TV on and see this. And I was sitting there with my son, who's 12, last night, and he's just watching this going, this is really happening. I said, yeah, it really is, man. We got to count our blessings. So thoughts and prayers to those folks. At the same time, here we sit, we're 63 basis points up right now, and it's after a bit of a rally. So we're never going to turn away some rate relief. We saw, I think last night, we saw some repricing from our investors that took place later in the day. And of course, now we're starting to see a ton of activity starting to come in locks, folks that have been sitting on the fence and really waiting to see if this is the right time. We came off of last week. We had an opportunity to come together as a team, and we really had two specific focuses. One was our growth playbook, which is our next 3-year strategy build, not this year, but the next 3 years. And we also had our first sales summit. And we spent a lot of time just really pressure testing strategies. And I guarantee you, given the first couple of months of this year, a lot of folks in my position and leadership teams all over the country probably come together and started looking at their strategies to determine, what is right, what is wrong, what needs to be doubled down on, et cetera. And so we spent a lot of time really pressure testing those strategies, e-closing, more aggressive recruiting, driving more lead gen through the front door, continuing to pick up more capture with our captive home building relationship, but also just taking general inventory of where we are spending our time and money and ensuring that we're focusing on money-making initiatives, holding our vendors accountable to ROI, doubling down on partnerships like a Total Expert or a Sales Boomerang, and then really sunsetting relationships that don't make a ton of sense. But when you look at January's numbers, we're blessed to be a captive lender for a home builder. I'll tell you that. And there's not a day that goes by that I don't just count my lucky stars. So, we've really focused a tremendous amount on spec buyers. The home builder has decided to take a spec strategy. What was going to be about a 60-40 mix this year when we went into the budgeting season. It's 100% spec strategy, and that strategy makes a ton of sense. And so we're trying to flip a lot of those folks right now because that's really one area of the market that builders can really help boost that, not to the degree that we're not seeing in supply, but they can certainly help offset that. And most of the big builders, Rich, have gone to that strategy. It just makes sense. So we're trying to put competitive rates, incentives tied in there, closing on time, those operational back office pluses. So really putting a lot of focus on client experience so that we can, win some of that business. And I know Joe's going to go over some areas of where we can get better about our approach. But that's really it right now is, we're actually seeing more applications through the door year over year than we did last year. It's just the time to get it in the pipeline and start closing those deals. But I do feel like there's a bit of that worry on the horizon, which, with inflation, with home appreciation, with rising rates, even though today we're seeing the last couple of days seeing a little bit of a bounce, there are customers that are eventually going to get priced out of the market. And that's, certainly something we've all got to be aware of. So what am I expecting? I've already kind of put about a 25% decline in there, and we're doubling down in certain areas, certain markets that are meaningful to us, and we're seeing some pops, and then we're reeling back in other areas. So I don't think anybody anticipated when we looked at the guidance provided by most economists out there that we tip the 4% scales in the first 30 days of the year, and we've seen that. And I don't think we also saw a 400 basis point decline over the last 6 months, and we've seen that too. So these are the realities, but this is mortgage, right?
What other industry, just drastic revisions to economic projections by the top economists in the industry in mid-February. But that's the mortgage industry. And Joe, you heard it right there from Michael. Leaders like him, all across America and our network, they really are examining their businesses right now. If it's partnerships, if it's platforms, if it's their structure and origination channels. And they are looking for ways to generate new business, right? And, there are certainly some impediments to just the purchase market in America right now. But the one nice thing is there is so much demand. There's demand from people that are actively want to buy homes right now. And then there's this shadow inventory of people that, to Michael's point, been priced out of the market or want to buy a home but aren't in a position yet. So, in these last couple of years, lenders haven't had to work as hard as they normally do to get business, right? There's been so much refi flowing in. But now it is back to beating the streets, right? And forging your relationship through referral partners. But that game's changed a little bit too. Realtors are not sitting in offices as much as they used to. Companies like Michael's, some builders or realtors, a lot more of in-house, mortgage companies now. So it's a different climate in terms of calling on referral partners, existing and new. So would really welcome your perspective on this changed climate and any thoughts or advice you have for lenders as we head into what could be an interesting year.
Yeah. So first of all, I think we've seen these cycles before in lending, as we were all kind of talking before we went live. I mean, we've all seen the movie before, and these are the times where the great companies get better and continue to grow their market share, and companies that maybe don't execute as well and are not forward thinking with the way they approach people plus technology and serve their customers. They're going to get further marginalized. So we always look at it as we're partnering, having executive strategy sessions, as there's always tremendous opportunity as things get shaken up a little bit. And some of the conversations that we're having and some of the things we see working is getting back to just executing across the entire customer journey, right? So if you think about, there's kind of two parts, and I'll give you the strategy on referral partner, but the bigger part that we see as a quick win area is there was so much business coming in for the last couple of years that there was, just by nature, some complacency that happened on, if you look at kind of first lead touch, right? Application to close, there was a lot of things that fell through the cracks, right? Like longer sales cycles. So the first thing you want to do, in our opinion, is look at everything across that journey and say, where are my holes that I can get some wins, right? If I have a certain amount of applications happening, I know those sales cycles are extended. So have I appropriately addressed my communication and engagement to both the referral partner and to the customer? That in itself, if you really optimize that, you're going to pick up deal flow there. And then, of course, on the backside, the most valuable thing in our industry, of course, is the relationships you have with customers and your referral partners. And it's a question of looking at the basics, saying, how am I educating my customers? How am I educating my referral partners on how I can be helpful? If I'm an originator right now, I have to think in terms of really two buckets: communication and engagement with the real estate community. The builder community is included in that. And how am I standing out, right? Am I coming at them from a position of, hey, I just want a shot at your deal? Or am I trying to add some value? Am I trying to educate them on, hey, we're seeing longer sales cycles, which makes the communication from us as a lender and you as an agent super important. We're going to stay aligned with you, make sure that we never lose a borrower or a buyer, right? That message needs to come out again and again and again. And so I also believe that just simply getting out, having more conversations, that seems super basic. Understanding how you're different in the market, understanding what's different about the way you accommodate and serve those lenders and realtors, and then having those conversations again and again and again. I was talking to some top producers last week, and I think people underestimate, when you're in a more normal market, you have to have more repetitions, right? You have to have, I'm stopping by offices, I'm stopping by open houses, I'm refreshing their memory more consistently on how we can add value. So those are, very basic, somewhat tactical things, but they're things that actually work and add value.
Very well put, Joe. And Michael, one thing I wanted to pick your brain on is just the new build and the home builder climate too, because we all know we have an inventory issue in housing in America right now. The best long-term, medium-term solution is build more homes, but there's a lot of impediments to that right now. And Trinity Oaks, the captive lender for John Houston Homes, a custom home builder. So we just really welcome your perspective on that piece of the industry, the new build piece of the industry, and any intel you can kind of bring to the table, given your close alignment with the builder.
Yeah, and if I could just go back too, I definitely will do that. I couldn't agree more with what Joe just said. I think we're experiencing a lot of that, and what comes to mind is the definition of insanity, continuing to do the same thing and expecting a different result. And I think right now we're seeing that inside of our shop. And I was having a meeting this morning with our CFO and our head of cap markets, and man, the branch managers, the LOs that are waking up every day and putting specific daily goals and objectives and not walking out the door until they've accomplished those things are the ones that will survive markets like this, which we know is just a normalized market. So, but great points, Joe. I really appreciated those. As you can see, I was taking notes also. On the home building front, like I said, most large home builders have taken to a pure spec strategy. There's a number of reasons why this strategy is taken. I mean, from a pure cost perspective, when you can understand materials needed and the costs associated with that, it just really brings a better bottom line experience. Your subs could be more effectively managed, and that's another thing. We try to stay in a pretty, we call it south of I-20 in the Dallas area. And so if you can keep your subs in close proximity and they know the product they're going to be building, that's a better overall experience. We're able to get to a time to build, which has been a bit of a crapshoot in this market, is being able to tell a customer on a new build that, hey, we'll have your home finished in 8 months, when really it's going to take 18. So I think the ability to be more predictable, which of course then in turn on a spec, because a lot of times we may be putting these things out after the sheetrock stage and calling them a spec. And if we can get relatively close, then we're setting the right expectations for the buyer. I think it's an advantage, or maybe a perceived advantage, at least over the next few years. Home builders that have lots, they're like gold. And, we tend to have at least the next few years of that question answered for the family of companies here. And we just can't, we're seeing a tremendous amount of traffic, which I think is a very positive sign. But at the same time, you look at housing starts. I think housing starts, we talked about it in some of the pre-call stuff, dropped 4.1%, which is the first decline we've seen in 4 months. And I think a lot of that really comes down to, or at least a big dip from our lens, is you're no longer seeing the pre-selling of those homes. So, the fact that you got 25% of the market that's saying now is a good time to buy, which is a pretty low number. And then on top of that, the pre-selling, because we're not building new homes, we're just building to spec, even though the traffic's there. And if we do build a home, we're going to build it at a premium. And I think, we can command that right now. So that's really the market. But, I would say that that's probably going to be the strategy for the foreseeable future too, Rich, is really more of a spec approach.
This is the Last Week in Mortgage Today. I'm Rich Swerbinsky with the Mortgage Collaborative. This week, joined by the president of Trinity Oaks Mortgage, Michael Kuntz, and the CEO of Total Expert, Joe Wellio. And Joe, one of the other really fascinating parts about this year and this climate right now is an unprecedented amount of equity that homeowners have in their homes, thanks largely to, really aggressive home value appreciation these last 2 years. Case-Shiller report just came out last week. The final 2021 numbers nationally, I think it was 18.8 or 18.6% overall home price appreciation nationally in their 20-city index. So, there's a lot of refinance opportunity out there for people that maybe can't buy a home because of the supply issues, that want to instead improve their home or do something along those lines. And, what we've seen this week, and we kind of forgot about this because rates ran up so quickly, but the historical nature of mortgage rates and mortgage bonds is it's a flight to safety product. So when you have this geopolitical tension that we have this week, we see the 10-year drop 30 basis points and 30-year fixed rates drop around 30 basis points with it. I think in this run up where rates have gone essentially from 2.5% to 4%, like people forget, like we could be back at 3% tomorrow. In this industry.
You never know, man. I remember a short time ago where we're like, oh, rates are going to be at 5%. And all of a sudden you wake up and they're at 3%. You never know.
Who thought we were going to be at 4% in early February? I mean, nobody. There's not one economist known to man that predicted that. So to that point, you talk about staying on top of your customers using platforms like Total Expert. Like, back when I was running origination for a lender, we had nothing we had some crappy CRM, but nothing with the capabilities of what your platform has. And this is vital for originators this year. And they can't go into this year looking at it at just the purchase market and kind of protect your house, right? Protect those customers that you've done purchase or refinance loans for these last few years.
Yeah. I mean, look, from our position, our philosophy has always been customer relationships are everything, right? Protecting that customer for having a lifelong relationship with that customer, protecting that relationship, taking care of that relationship, adding value to it so that when it comes time for you to be able to provide provide a loan, a cash out refinance, you're in that position to where you've taken care of the relationship to a point where you're going to earn that opportunity. And we see just tremendous success right now across the base of customers, the folks that are executing on cash out refi type strategies, to where they're using data. So big investments from Total Expert this year in data, customer intelligence more broadly. We're going to be announcing something pretty exciting here soon. But it's really all about how can I better understand exactly what the situation is with all of my customers and prospects, right? Future customers. And then how can I be able to deliver to them a message and an offer piece of advice that's going to be super relevant? An example of that is if they've got $200,000 in equity in their home, and they've got revolving credit card debt, for example, that's a scenario where there's a strong likelihood they're going to want to tap into that equity, even with rates being a little bit elevated, right? So if I really understand what's going on with my customer, I'm using data around, valuation and rates, and I'm bringing that information together. So I have a really complete profile of each customer. Then I can deliver on that. I can not only, when I'm personally talking to them, I understand what's happening, but I can also drive campaigns and things like that to create value and opportunities.
Very well put. And yeah, it's going to be very important for lenders this year to stay on top of that, and to, really protect their pipeline, and to your point, forge and strengthen those relationships with their customers using, the technology you guys make available to lenders.
Yeah, look, it's a human plus tech business though, right? I mean, that's the whole thing. I think the market leaders clearly understand that it's not just a digital tech strategy. It's you gotta have that human touch in there, that human connection, which is why so many of the lenders we get the opportunity to work with that are involved in your organization are so successful. They really understand that.
Michael, the tough margin compression climate right now, right? You've got volume has dropped, rates have dropped a little bit this week, but still not a lot of refinance business currently today out there. You've got lenders. The recruiting climate is really intense right now too, right? So any lender that's recruiting, typically you're going to be priced pretty aggressively. So lenders are trying to make sense of the year, and most people are overstaffed to some degree in their back office. So it's one of these, like we saw the winter of 18-19, one of these tough margin compression climates. We're starting to really feel it and hear it from the members, and sure, no different down in Texas, right?
Yeah, we're absolutely feeling it. I wish I had better news to report there, but that is the reality. Again, though, we've seen these markets. We know how to get through these things. I think it's just a matter of you really have to assess the strategy you put forward, and if you didn't put forth a strategy, then you're probably going to experience that compression for an even longer period of time. I think it really comes down to understanding the partnerships that you have in place. Are you maximizing the partnerships that you have in place? Like Total Expert, we're utilizing a lot of, just as Joe was talking about, cash out opportunities, leveraging partnerships like a sales boomerang so that we can keep that database constantly working, and then sunsetting those things that are not. We're really watching discretionary spend right now, right? We're looking at the partnerships and the places we need to be, and then after that, we're gonna settle down like a jackrabbit in a snowstorm, as they say, and just really try to get through the season. We look at things on a week-to-week basis. We want to continue to keep the front door open so that we drive confidence with LOs. But at the same time, we're not going to give away the farm. We're just not that type of business. But little things that we're doing, for example, I talked about the spec strategy, and Joe talked about the customer experience. And if we have an opportunity to flip a spec buyer, somebody that walks in with a real estate agent, and we're able to show them a great customer experience after that customer has moved from lender A over to Trinity Oaks Mortgage, We just built trust and credibility with a realtor we may not have ever had a relationship with. So how do we begin a drip campaign, a next transaction strategy that can really start to pay off? So, we really feel like once we get them into our operation, they're going to get a great experience. Our loan officers are top notch, our LOAs, our operational staff, but we run pretty lean to begin with. So we do have certainly capacity that we're looking at maybe reallocating to other areas of the company. But at the end of the day, I think, we're going to see the spike again. One thing I hope economists are right about is that we do see perhaps even a leveling in that Q3 timeframe, maybe a little bit of a downward trend again in rates, and we see a nice back into the buying season. But margin compression is real, Rich. We're managing it week to week. So
this is the last week in Mortgage Today. Rich Swerbinsky with the Mortgage Collaborative this week, joined by Michael Kuntz of Trinity Oaks Mortgage and Joe Welu of Total Expert. And Joe, you brought something up at the beginning of the show that I thought was very poignant. And I've just seen it in my career as a lender, and more specifically in this seat, is these types of climates, right? If it's the fall of 2020, 6 months after the pandemic, when people were just flooded with so much business that they were employing many different types of strategies to react to that, or this type of climate where things have dropped off, leveled off, and lenders are reassessing things, the cream rises to the top. Any of the extremes in a very extreme industry, I've just seen it happen. Like, good companies pick up market share throughout these types of cycles. And would just be curious your perspective on that. Having many mortgage customers for many years through many different types of cycles, and anything maybe you've seen that has helped that cream rise to the top in these types of climates.
Yeah, I mean, largely we see great companies that have great leadership. Michael's a great example of that always capitalize on these types of markets, right? If you have great people, you've had a great strategy in place, those companies are going to benefit from these markets in the long run. And, unfortunately for the companies that maybe didn't invest in their people, they didn't invest in their tech, they didn't put the strategies in place over the last couple of years to continuously evolve the business, they end up getting punished a little bit in these markets, right? And it's just sort of the natural way these markets work. And we've seen it again and again. And, I ultimately think that like all of us in the industry, we believe that home ownership is the central thing to financial health and wellness in this country, right? That's not going to change. It's not going to change, right? So it's not going to go out of style. So I'm asking myself, how do I elevate my organization so that we're the trusted partner for all of those opportunities? And if you stay focused on that single thread and not necessarily get distracted by the peaks and the valleys, you have to react to it and run the business appropriately, but just stay focused on the fact that we're still in a great industry. It's much, much needed. So.
Yeah, if I could piggyback on that too, Joe, great point. I think one of the things we found is, I wish I could be next to the customer every day, because I do feel like the further and further you get away from the customer, the more innovation goes out the door. And that is something that, if I could project, just guidance and counsel out there is, don't lose sight of the people that are on the front lines, that are hearing from the customers. Take that inventory in, and then put it into a strategy. That's been one of the big things that I'm committing to this year. I want more than 50% of our employee base to be a part of our growth playbook, our strategy build, because I want their voice to be what's driving the next 3 years of the company. Because I can sit in a room with 4 or 5 of the leaders that I've got. We can try to figure it out, but that's just, that's not responsible. So I couldn't agree more, Joe. That's a great point.
Yeah, great point. I think it nicely puts a bow on what we've spent the last 30 minutes talking about. Like, this type of climate, still a lot of opportunity, a lot of demand, good industry that even by the most dovish projections is still going to have a historically good year because of demand to buy houses, especially when you compare it against what rents cost. So there's a lot going for our industry right now. And I think you guys have kind of succinctly summed it up in that it is the implementation of stick to your knitting, in this day and age of virtual everything and work from home, you still are a human company, right? To Michael's point, listen to your people on the front line. And to Joe's point from earlier, stay all over your customers, marry the principles that have made companies great in this industry forever with some of the fantastic technology that is more recent, like Total Expert and Joe's company, and good companies will thrive through it. So it not rocket science, but amazing how not everybody gets all that. So, but
people get caught up in the noise, right? And they tend to focus on kind of the smaller details instead of the big picture.
Yeah. And there's no, between government intervention in our industry and the interest rate impact on it, there's a lot of noise. There really is. And we talk about it on this show every week, probably contributing to the noise. But at the end of the day, right, it's run your business, do all the things that make great industries and businesses in this industry successful. And you're going to be okay through any type of climate. So, but gentlemen, really enjoyed the conversation. Michael, always great to see you, and really appreciate your membership and your engagement with TMC.
Yes, sir. Thank you, Rich.
And Joe,
thank you, bud.
Yeah, good to see you, brother.
Yeah, and Joe, good seeing you, man. And
likewise.
I cannot tell you how much all of us at TMC appreciate the long-term partnership with Total Expert and all the customers and members that we have that are better positioned for the year that we have ahead of us, and some of the challenges that we talked about because of your tech and your platform. And greatly appreciate it.
Man, I appreciate that. We're all in with you guys, all in with the industry, and looking forward to making progress this year and having an impact.
Awesome. And to our attendees, thanks as always for taking 30 minutes of your week out with us. We're here every Tuesday at 2 p.m. Eastern with the Last Week in Mortgage Today. Until next Tuesday, have a great rest of the week, everyone. Take care, fellas.